Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Apologies for not posting in the last couple of days. I've not been well and now a lot has happened in the market. Right now what you see in front of you is my portfolio, £98,965. And to be honest, I think it was at one point the lowest it's been, I think 98,000 in the last couple of days. The reason for that is because the overall market has come down quite a bit, but we're still up about almost 10%, which is quite nice. And we've talked about this before potentially happening. There are a few reasons that this is happening, so we'll just go over in this video. We're just going to go over some of the things that are basically making the markets come down quite a bit. And then I'm going to talk about some of the companies that have reported earnings of the last few days. But the last just couple of days, a lot of the companies that I own in my portfolio have reported. So we'll talk about some of these, and then we'll talk about some of the companies that are reporting next week. And then the next video, inshallah, I'm going to talk about companies that I'm buying. So stay tuned for that one as well. So yeah, let's get started. Let's talk about this. But before we do that, as always, if you can press that like button, of course, it will genuinely help the channel. If you haven't subscribed, to do that. If you can join us in the Patreon account, even better, where you get access to all my buys and sells, all of a lot of the brothers and sisters who are sharing good practices. They're sharing their buys and sells, the reason why they're buying and reasons why they're selling. You get access to all the dividend trackers, ETF trackers, as well as, like I said, the Discord, the Sharia compliant investing ebook, and it only costs you 15p per day. So inshallah, it will really be massive help to the channel, and of course you will gain something from it, inshallah. So there are a few things that are happening right now in the market. So the three main things that I can think of right now is interest rates, especially in the US, where interest rates have basically were expected to come down maybe in the next couple of quarters, but the Fed has not said. Now we potentially might not cut in the next few weeks, in the next few months, and some analysts are actually saying now potentially they might start cutting the interest rate in 2025 rather than in the next quarters. So they were expecting June, September, so and so, but they now saying maybe not. So potentially 2025. And for that reason, because the markets were expecting the interest rates to come down, that has now taken it. Basically, the markets have taken a hit because of that. Top of that, we've got the situation, the geopolitical between Israel and Palestine, and Iran and everything else that's happening in the Middle East. That situation has not helped with the oil prices going down, and the fact that Israel is now basically sending missiles to Iran and so on. So that whole situation is now not helping the oil prices. We've got quite a few things happening, and on top of that, we got the earnings reports coming up. It started already. So if some of these companies do not report what we expect, like for example ASML basically came out, and I'll share that with you guys in a bit, but it wasn't great. Their outlook was not great. They've reported something good, but when it came to the guidelines, it was slightly lower than what was expected, and that kind of hit the rest of the semiconductor companies. And that sort of a thing will happen in the next few weeks, especially once the big boys start basically reporting. Netflix, I think, did well last night, so some of that will also impact what's happening in the overall market. And then the UK is expecting to start cutting rates in May 2022, which is 2024, which is quite nice to hear. And a lot of that, basically, the Bank of England, the governor, is saying, okay, we're not as bad as of course, the US, and potentially, interest rates might come down. Inflation might come down, and for that reason, they probably will start cutting very soon. And all of that is because of the inflation. The UK inflation is slightly eased to less than expected, which is nice, okay, because it has been going up quite a bit in the last few months or whatever years. So yeah, so there's a lot of little things like that happening, and some of these are huge. Some of these will of course impact of what we do and how we invest in the stock market. But one of the things that I've always said to you guys is, yes, of course, there are geopolitical situation, there is interest rates there is potential inflation, recession for the US and so on. All of these things play a big part, but what we need to do is think about the bigger picture, and that is the most important part. For me, like I've always said to you guys, if you're investing for the next month, then you're in the wrong place. But if you're investing for the next 5 to 10 years, then you are on the right track and you are on the right place. Just to bear in mind, these things will happen, and you just need to think about the bigger picture. Right now, what you see in front of you is the Nasdaq. Okay, so in comparison between the Nasdaq, the Dow Jones, the S&P 500, FTSE 100, and the Russell 2000, which is the small cap index. Okay, so a year to date, we're not bad actually. 5%, 0%. The 5% for the S&P 500 and FTSE 1.4. FTSE for the first time in its life is actually up 1.5, and then the Russell 2000 has come down. This one has actually gone up quite a bit in the last 6 months. That's probably why it has come down. When you look at the last 6 months, a lot of these, so the FTSE is actually doing 4.5. That's not bad at all. But look at this, almost 18%. 13%, 14%, 14% here. So it's basically, we did really well in the last 6 months. Okay, but when you look at the last 5 days, that's where we have issues. Okay, so the Nasdaq is down 4%, the Dow Jones is for 1 point something percent, 3% for the S&P 500, FTSE 1.8, and the Russell 2000 3.4, 3.5. And for the 1 month, more or less similar situation, but FTSE is still up by 1.5 almost percent. So yeah, we have come down a little bit, but that doesn't mean we've got a long way to go. So because when you look at it for the 6 months, we're still up quite a bit. For the 1 year, we're still up quite a bit. So 27% for the for the Nasdaq and 20% for the S&P 500. That's absolutely huge. So for 1 year, so we might have seen a little bit of drop in the markets, but we're not there yet. We're not there yet. In fact, let me just quickly show you. This is the heat map for 1 week. Okay, so you think, oh, everything is red, and this is what you will see on the news. This is what people will tell you. So the 1 week, everything is going down. The Amazons, the Tesla is having a really horrible time. I'm going to talk about Tesla on the next video, inshallah. So yeah, there's a lot of companies in the red, but when you then change that to 1 month, okay, so we haven't done well in this month. Okay, and then you look at 3 months. Everything is green. Especially these big boys here have done absolutely amazing. Again, Tesla down almost at 30% for the 3 months. Then you change it to 6 months. Okay, everything almost is green. So we have basically, yes, we've seen the markets drop, but we're not there yet. So we still need a little bit more. So now what I'm going to do is I'm going to talk about some of the companies that have reported their earnings and what is happening to them, and then at the end I'll give you my overview of where I am in terms of investing, in terms of what I'm going to do moving forward, inshallah. ASML has reported its earnings just this week, and of course they have beaten when it comes to top line. Bottom line was basically almost the same, but it was year on year that was actually down. And one of the things that basically the outlook, this is the bit where they actually but some of the Wall Street people didn't like. So this was unchanged. Okay, so I'm not sure what they were expecting the company to do. And when you look at the charts, for example, quarterly net bookings for Q1 of 2024, basically we're down Q1. Basically, if you basically compare it with this time last year, last quarter, and this time 2023 quarter, it was down about basically 60%. And year on year about 3.4. Let's just call it 4%. So yes, we are down a little bit when it comes to the bookings, but when you look at quarterly net bookings, again, you can see the difference. Okay, but when you look at the actual products, so the lithography systems sold, okay, the new ones, they've sold 66 of them. A year before, so last quarter, they sold 113. So this is a massive drop there of over 41% for the quarter to quarter, and then year to year, basically year on year is actually almost at 31%. Used ones, they've only sold 4 in comparison to 11 last quarter, which then means 63% down, and a year on year is flat. And that's the reason the stock dropped almost, I think it was about 6-7% on that day, and it took down quite a lot of the other companies that are in a similar sort of industries. For example, the KLAs and the Lamb Research and so on. So these companies have come down. But this is something that I'm not too worried about, because when you go back here, just look at the earnings expectations. So it's been a few days now, and some people have came out. Let me see in the revision side of things. So yeah, now the downside is almost 10 people have downgraded in terms of the revision. Let's now look at the expectations. So with this year, we're expecting 6% down year. Then the following year in 2025, we're expecting 55% growth in terms of EPS, 15%, 24%, 13%. So if you are a long-term investor, you wouldn't worry about this. Okay, overall, you still be up every single year. And when it comes to revenue, yeah, just almost a flat 1.6% down this year, then 30% up the following year, almost to 10%, 14%, 12%. So again, this is a cyclical business. The product they sell cost is hundreds of millions, and the companies that buy these products from this is the Intels, the TMCs, and so on. And these companies, of course, they are building new manufacturing in the US and so on, so they will still need the product. But it's one of those things, if you have the product already, you're not going to buy it every single year, brand new ones, unless you are expanding in terms of your manufacturing and so on. So it is expected. So I'm not sure what basically these people were expecting from this company. So anyway, for me, this is a great opportunity, hopefully, to add to the stock that I already have. It has not come down as much as I wanted it to, okay, and I will talk about that maybe in the next video. But as you can see here, ASML, I still have my 5 shares. I'm up over £1,000. My average for this company is right now $600 basically dollars. We're looking about 880 something, and still some analysts are expecting the stock to go up. So even if we go back here and you just click ratings, go to Wall Street, okay, you can see we've got 24 strong buys, 4 buys, 10 holds, 1 sell, and 1 strong sell, which then means about 16% upside from where we are, over $1,000 US. So right now I'm going to hold on to what I have and leave it alone. The next company that has reported is J&J. J&J has reported its earnings, so they beat top line, revenue was in line, and guidance basically was slightly lower than what they were expecting. And this is basically what they've made in terms of sales side of things. So different segments. So innovative medicine was minus 0.2. Year on year was down, basically was up about 1%. MedTech was 7.8, that was up about almost 2%. Year on year was almost 4.5%. And as you can see the graph here, the two, okay, as you can see 13.72, 13.56, so almost in line, 7.6, and then 7.8, which is so slightly up. And regional sales, as you can see here, the US and okay, what they've done, and international what they've done. So again, US was down a little bit when it comes to quarter, but for the 1 year they were up. For the quarter to quarter, for the international was actually up about 4%, and down for almost 3.5% for year on year. So I'm not really don't have any concerns. Actually, it is really undervalued at the moment. So I might be adding to my portfolio, which might basically shares that I own already. And I'll just to be transparent here, I will show you exactly where I am right now. I'm down about 3%, which is basically for the first time in a while. I'm actually happy with that, of course. As I've always said to you guys, if the company is basically financial is intact, if it's a down year for that company, that's the year that I like to buy more of that stock. The next one we're looking at is Procter Gamble. This has reported just this morning, so it's interesting that they've actually gone down and about 2%, which is nice to see. And again, they beat top line when it comes to, they missed the top line, but they beat the bottom line here. So in terms of EPS, they were fine. In terms of revenue, 240 million down, and the expectations, and they slightly raised some of their basic expectations for EPS and the revenue side of things. And they've talked about the fact that they have the unfavorable foreign exchange rates right now, expecting about 600 million in terms of tax hit and side of things. And yeah, so there is not really huge basically worry for me looking at this, but I'm gonna of course do a bit more research on what else was included. And some of the graphs here, just looking at Seeking Alpha, so the net sales breakdown, if you see so there are different, these are the different basically segments of their business. So as you can see, fabric and home care was minus 3%, and when it comes to Q to Q, and the year on year basically was 2%. Baby, famine, and family care for almost basically 4% down. And when it comes to quarter to quarter, but when it comes to year on year, is minus 2.5%. So again, that is because of that. That's probably why the company is down quite a bit. And these are the actual numbers of those things. And then net sales for beauty, you can see 7.8 minus 7.8 when you quarter to quarter. So that's where the problem lies, I think. And then 1.6 when it comes to year on year. So year on year, they're actually on track. But when it comes to the comparing it 2023 quarter, Q3, whatever they was, basically they're down quite a bit. So again, this is one of those situations. Will the company still be okay in the next couple of years? I think definitely that should be the case. You might have to give it a few more days to see if there's any earnings revision and so on. But right now they're expecting about, almost 9%, 8% again, and so on every single quarter, every single year for the next 3-4 years. And then look at the revenue, that 3-4. These are the type of companies that grow their earnings about 4 to 5%, 4 to 7%, 8% every single year. So there's nothing huge there. And ratings, I'm sure this will change later on today. So 13 strong buys, 5 buys, 8 holds and 1 sell. And as you can see, it's about 10% upside from where we are now. So nothing huge to worry about. The next company that I want to talk about today is one that I do basically spoken about it quite some time, and that's Prologis. This is a REIT. This is the company that owns a lot of the warehouses Amazon uses. And they have reported the earnings recently. And just to kind of give you an overview, because this is one of the companies that I'm interested in, I'm going to talk about that tomorrow as well. Q1 in results, as you can see here, revenue was 1.96. FFO, which is equivalent of the EPS, is 1.31, and this is what they're expecting for the. So that was a beat, but this is where the reason why the stock was down quite a bit on the day they reported. So as you can see, it was 0.09 difference in terms of the miss. So nothing huge to worry about for this company moving forward. And one of the things that they've talked about that is actually worrying is the volatile and high interest rate environment, along with geopolitical concerns, are prompting prospect tenants to be more cautious in leasing, and the company said. So that's the only reason, because of the geopolitical, because interest rates is still high. Okay, some basically companies are not willing to rent a place from this company, and for that reason the stock has come down quite a bit on that day. I think it was about 4 or 5%, whatever it was. So it's interesting to see. So what I'm going to do in the next video is just talk about these companies that are, I'm planning to add to the portfolio. And there are a lot of opportunities coming up soon, InshaAllah. And I'm sure if the companies that we own keeps going down, over now, we've gone up about 200 since we started recording the video, or maybe a little more than that. But yeah, so it's one of those things that it happens every single year. People start panicking every single year. And then those who are selling actually miss out. Those who are buying high quality businesses while they're still cheap, those are the ones that are going to benefit. So what I'm going to do is in the next few weeks is to basically show you exactly what I'm buying and start adding some money to the portfolio. As usual, I'm going to start with, again, the £250 a week, which will basically give me that £1,000 a month. Sometimes I'll go over, sometimes I might not, but I'm going to start doing that again. I haven't actually added any yet, but as you can see here, that's basically the money I have got right now in the portfolio. So that's the money that I will be investing in the next couple of days, InshaAllah, and I will basically show you what I'm going to do with that money. As always, I'm going to try to be as honest as I can, as transparent as I can, and I will share with you guys everything I'm doing. And of course, if you have any questions, let me know. But please, whatever you do, do not sell your stocks because they've gone down 5%, whatever. If your theses are still in place, everything is good with the company, then of course start looking into adding to it rather than of course selling your stocks. Again, don't take that as a financial advice. Of course, you do your own research. And yeah, thank you very much for watching. And if you have not joined us in the Patreon account, please do so. Have a wonderful day. Assalamu Alaikum.